Hey guys, welcome back to the Capital Mindset Show. Today we're going to be doing a subscriber request, and this one's a fun little company, and it's called BRP Inc. Okay, so BRP has a variety of brands focused on the more fun parts of recreational activities, including watercraft and snowmobile, stuff like that. So one thing that probably people are most familiar with is their Sea-Doo brand. So Sea-Doo is entirely focused on providing PWC or personal watercraft. By the way, technically the term jet ski is actually misappropriated or misapplied to what you think of as when you think jet skis, right? So people think jet skis are those sit down things, basically water motorcycles. Well, in fact, a jet ski is actually the stand-up jet skis. Okay, so for those of you who didn't know that, technically those jet skis that you guys call jet skis, or not you guys in particular, but the average person thinks of, are technically PWCs, personal watercraft. That's a little bit of a fun fact you guys didn't know. So I actually own an actual jet ski. And it's the Kawasaki, which is actually the brand jet ski. And it's SXR 800. And they just actually came out with the SXR 1500. But that's like a good little exercise when I take that out. And then, you have the boat, which is for the relaxing. And then you have that, and I have a little group that we actually go out. And it's all good fun. All right. So with the PWC or personal watercraft, I'll actually showcase that right here with what Sea-Doo has to offer. So in the entry lineup, we actually see the Spark. So the Spark and Spark Tricks. This is not like a product review video, but it's good to understand what it is this business does. And this is actually what most people are familiar with when they think of Sea-Doo. And, the Sea-Doo brand is actually, I think, their largest brand. The company's ticker is actually DOOO with 3 O's. That's to kind of show you that the Sea-Doo brand is actually a very important part of BRP Group. Okay, so in the beginning you have the Spark Tricks. One of my friends has the Spark Tricks actually, but these are the entry level. They're very good, quite affordable when compared to other types, which we'll see down below. I think between the two, by the way, again, this is not a product review, that the Tricks is far superior to the regular, and it's actually worth the extra amount. But that's a side note. Then, you can always pay up more. These are where you get the standard PWCs, and then you can go crazy. And one of my close friends used to have one of, where is it? I think it's this one, the RXTX, crazy fast, insanely fast, actually, insanely fast. So this basically has a car engine, right? Inside of it. So pretty incredible. It's not literally a car engine, by the way. I'm just saying it's in terms of horsepower, it's basically a car engine. So this is kind of to familiarize yourself with what it is you're dealing with. But of course, if you go to their website, you can kind of get a better idea of what it is they actually do. So you go here in my brand. So you see they have Ski-Doo instead of Sea-Doo, and that's their ski variants, right? So for not ocean, blah, snowmobiles and the like. And then they also, by the way, if we go back to here, Sea-Doo actually just started selling pontoon boats. So pontoon boats, otherwise known, like a party boat. It's a pretty cool little boat. It's actually a very affordable pontoon boat, actually. I didn't even know it was that price. Yeah, they have different versions, but that's not the point. The point is they're trying to expand the product. It's very modular. That's actually what they're advertising. That's a very modular boat. And basically, for pontoon boats, they're more relaxed type of vibe. People bring it on and they drink and they hang out, stuff like that. So that's interesting that they are targeting that market. It's very unique kind of look. I think it's a good look, but some people might be put off by it, but I don't think it's, a big deal at all. I think it's pretty good. Will I be buying it? No, I'm perfectly content already, but no, I'm probably not going to get it, but I'm excited to see them out on the water and then see, how people enjoy them as well. All right. So actually we're going to move on to the price action, and with the price action of the business, we're going to see what DOOO has been doing. So moving over to the price action, let's see what they've done on the 5 years. So over the 5 years, they've actually done really well, of 207%. That's outperformed the market. And then if we look at the max amount, about 150%. So what that tells me right there is a lot of the performance has been as of late, more recently. Okay, so we do see that it was fluctuating, and up until before the pandemic, it had gone up 169%. And then we had the big drawdown. Of course, what happened after that was people were stuck at home. People focused on more recreational activities, and a lot of people went out and bought jet skis. I remember the time of 2020 was very interesting. Everyone was out buying jet skis. There was kind of a joke among the the Facebook Marketplace crowd, the jet ski crowd. They were called, they were saying the stimmy checks. The stimmy checks were causing this massive drop, and you could have sold your ski for whatever amount. Boats were selling out. You couldn't buy a boat. It's very difficult still kind of to find a good boat. I remember for a while there was a lot of problems at the dealers. They didn't have boats. So well, they didn't have as much variety as they typically have. You could have obviously gotten a boat, but it was more difficult. And with that, actually, I'm going to coincide into some of the concerns I have right off the bat. So the BRP group, what my main concern is financing. So a lot of people seem to have, we're going out and buying these products, and it wasn't necessarily the stimmy checks. That was a joke, okay, among the crowd. But when reality, what was kind of going on was a lot of these interest rates were dropping tremendously, and a lot of consumers who would otherwise be spending the money elsewhere were figuring out how to buy these things. And then the abundance of credit available allowed a lot of people, not allowed, but a lot of people sought out ways to purchase these products, and a lot of people got jet skis, boats, etc., more than the typical. Okay, and then that, of course, was a very good moment for something like BRP Inc. A very good moment. And if you look at all of the competitors of BRP Inc., so such as Mastercraft and the like, all of them have been performing really well in the past couple years, right? Again, that's stemming from that pandemic. So from there, let's actually go over to the earnings. Well, this is their highlights, right, for their fiscal year of 2021. And again, this is the sales pitch. So if we don't like what we see here, I'm going to be concerned about the rest of the business. But again, we're just going to go through this real quick to get a feel for the business together. This is the first time I'm actually seeing it. So I like to do that so I can think live, right? So revenue based by category, we do see that they have year-round products. So they're trying to show us there that they're not seasonal, right? Because as an investor, I prefer stability. So I prefer not to be seasonal. Of course, money is money. So if they do those businesses, great. Seasonal products is 31%. Right. So I think when I think seasonal, I'm thinking already like more stuff geared towards winter. And then that's what I'm thinking seasonal. Year-round products can be some stuff like watercraft, because there's always parts of the world where you can continue to use watercraft. Okay, revenue by geography. This is very important. While BRP Group is headquartered in Canada, a lot of their business is done. In fact, most of their business is done in the United States, and actually a minority of their business is actually done in Canada. About 15%. And well, they have the breakdown there. You can pause there. But for those of you who are just listening in audio only, 56% in the United States, 29% international, 15% in Canada. Okay. And then here they're highlighting the stock price performance in Canadian dollars. To be very clear, again, because they are a Canadian company. So they have performed really well. When a company has performed really well, of course, they're going to put it there because, again, this is the sales pitch. They're like, invest in us. And this is why, because we've outperformed previously. Okay. So we have to keep that in mind. And the net income, they're showing us there in a nice little graphic that has increased. However, you see it's down from 2020. My concern, it's kind of manifesting a little bit right there. Will it continue going forward? We will see, and we'll kind of model that out. Total revenues, of course, has gone up, but we see that big jump from 19 to 20 relative to previous years, and then kind of a decline a little bit in 2021 because maybe we brought demand forward. And we discussed things like this before. For example, in the Corsair videos, we discussed the same thing. It didn't take a genius to kind of say, okay, there's probably going to be some normalization going on here. Well, with this company, it's kind of like the exact same thing that I'm proposing here. The potential for normalization is there. We have to figure out whether or not that will occur. Okay. So going down here, product lines, power sports, camp. Okay, cool. I kind of want to see, well, this is like their off-road stuff. Pretty cool stuff, actually. Snowmobiles. By the way, I don't have experience with all these products. So this is another thing that you can consider. Figure out what the consumer, what their customers feel about these products. That it's very easy to find, just look at reviews about them, get a feel for how it is if you don't have personal experience. See if they're innovating in the right ways, right? Because at the end of the day, who do you have to convince to buy your product? The consumer. The consumer has all the power. You have to, in a capitalist system, you must make sure that the consumer is satisfied with the product. Otherwise, there are others who will, they will go to others to give them that demand, right? We must satisfy the demand as a business, right? So passports, okay, cool. I can just tell you from experience, just the Sea-Doo part, I think their customers for the most part are satisfied, right? Of course, they have competitors that are very good. For example, Yamaha is a very good brand as well. Kawasaki as well. All right, scrolling down here. Let's see this market indicators. Okay, this is that business segment though. All right, kind of scrolling down through here, seeing if there's anything. Okay, here's something. So net income. All right, this is the end, I think. Yeah. So right here, just want to quickly look through this. Net income has kind of come down from 2020. We saw that up there. We want to see the, this is the operating income down here. So operating income actually is up. Okay, so operating income is up. What probably happened in terms of the decrease in net income is probably a line item, right? Oh, yeah, right there. So foreign exchange gain or loss, that had a big impact there. Didn't have a big impact in 2020, but had a big impact here. Gain or loss. And okay, so I think that's the biggest impact here. And income tax adjustment. So they made an adjustment on their taxes in reconciliation. So that's fine. All right. So, but in terms of operating income, this is like a good taste. But remember, I dismiss EBITDA for the most part, but in some cases, again, investing is very nuanced. I like to look at it. I like to look at pretty much everything. You drive a story from the numbers. So in this case, I'm seeing that the operating income actually is up. It hasn't actually declined yet, but I'm concerned that it will decline in the future or in the near future. And then that makes me a little bit, cautious about this business already. And I want to be clear before we actually step into the model. Okay, so I think from here, we're actually going to go into the model. And I think I already have it. Yeah, I already have it put in. So what I'm going to go do real quick is bring you over here and pause. You guys can pause and look at the management team and see how much they're paid and stuff. And it is converted to US dollars. And just so everyone knows, this is CAD, Canadian dollar, converted to US dollars in a lot of these instances. So I just want to be very clear by that. Okay. So so some of this is actually off because I have to still brush up on some of the features. So for example, this is actually enterprise value, but it's calculating after the conversion on the enterprise value with the market cap in Canadian dollars. So it's actually incorrect. It's 1.7 billion. But that is the right market cap in terms of Canadian dollars. And I did double check. So it is doing that part right. It's just doing this part wrong because I have to stop the model from converting and then add it and then keep it like that. And then it should only convert over here. All right. But for the most part, everything else should be correct. The cash flows and all that should be correct. So we'll scroll down here and take a look at revenues. So the trend line, actually, we are below trend line right now, the estimate from analysts is actually that it will go up. Okay. Very, very clear to note that analysts expect this to go up. Analysts also expect cash flows to rise a lot above trend line. And then shares, you can see shares have declined. Okay, so we ignore this part over here because the data is not showing there, but we see that since the measurable data, shares have declined. So they have engaged in some buybacks and quite a bit. So they're returning a lot of capital to shareholders. Immediately, that takes me to the smell test of should they be doing that? Do I want them to do that? Well, I look over here at the return on invested capital. It is taking a good amount. And it's pulling it from the ratios because we're going to go check it, but it is a very high amount. So actually, I would rather them not do so many buybacks and reinvest it back into the business if that's the level that they're returning. However, here's a caveat. Well, management sometimes does have a better picture of the business, and they may be saying, well, if we did do that, our ROIC won't actually be that high because we don't really have that many projects to really invest in. So we are returning capital to shareholders in that way. So I think that what they're doing is they're looking out for shareholders. So I think in that sense, they're very shareholder friendly. Okay. And I think they are very shareholder friendly because when I go to a website, and actually this is a really good point. When I go to a website and I go to, an investor relations. So here I'm on the investor relations. Let me go right here. Let me basically start all over and show you guys what I mean. So take a look at the lineup, right? So we have investors, we have right here, governance, ethics, financial presentation, stock information, news. So I think it was in stock information. Yeah, right here. When they do this, investment calculator, dividends and all that, I really like that. What this kind of tells me is the company went out of their way to show shareholders or prospective shareholders what their performance would be like. Okay, they don't have to do stuff like this, but I actually do like it when I see this in a company. It does show me that, they are caring about you. They are trying to do things to make you interested, right? And that shows, a degree of caring, okay? That doesn't, it's not the end all be all, doesn't make the business amazing. We have to invest in it. No. But it's really good to consider, to know that they do that. All right, so taking a look back here, We do see that this company appears to be extraordinarily cheap, and it is very cheap on a cash flow basis, and it already looks cheap on a PE basis, right? So on a GAAP net income basis. So again, my concerns are, will this recline? Will this come back to normal? Because we do see analysts are very bullish, and this is taking the average. It's not taking the most conservative. It's not taking the most aggressive. It's taking the average. And so I just want to note that they are being a bit aggressive maybe in their estimates relative, especially when you look at the same exact estimates, right? The middle estimate is not so much higher in terms of sales. Okay. Now I would like to see, for example, we do care about, this is 2022. We do care about 2023, 2024 and the like. Okay. But you know, that's good to know. All right, so let's take a look at the ratios and kind of get a feel for this business over a long period of time, see how they performed, and looking at the liquidity ratios. We do see this business has really maintained a healthy current account. I like to see that. Remember that the cash ratio is very conservative, but even then, the cash ratio has kind of improved in more recent times, but it has basically stayed the same from 2013. All right, so let's actually, well, we'll look at the full picture. But I was going to say we could just decline this to 5. And let me zoom in here because I know some of you look at this on a phone or something. So I have to be cognizant of that and make sure you guys can visualize this. And then so looking at the long-term debt ratios, we do see that long-term debt ratios are about the same, hasn't really declined or risen too much. And then the total debt ratio, you know, it's still about the same. So I think they're maintaining themselves at about the same. Taking a look at the long-term debt to capital is okay, pretty good. Debt to equity, again, equity is technically negative at the moment. So that's why the next two amounts are showing negative percentages. We will ignore those. Okay. Ignore them. And then interest coverage we care about, and interest coverage shows, again, they're managing it very well. Okay. So remember that equity, since equity is negative at the present moment, all the equity measures are going to be negative. Okay. And then when we look at ROE, we're going to ignore that as well. Okay. And there are plenty of examples when businesses have negative equity and it's not really a concern to us. Okay. What negative equity simply states is that the amount of liabilities in total are greater than the assets on the books, right? And remember that the liabilities at times, it can be overstated due to a variety of factors, depending on the nature of their business model, such as if they have some sort of financing arm in their business. And if they do that, liability section can be quite high. And so a negative equity account is there. But we have to give some nuance to that or some context to that and not be so scared of it. And that's my assumption of what's really going on here. And it's very lumpy. So, you know, sometimes we see equity as positive, sometimes it's negative. And then equity is at least very low, because even when it's positive, having a financial leverage or debt to equity of about 500% indicates to me that in that year, they had a very little equity, because that's the return on equity, for example, the ROE. If I take a look, yeah, you see it's really high that year. So it's like saying you're going off of a small base, right? So it's a really high ROE. So I'd rather look at the ROA in this instance, so the return on assets. And that's, again, part of the DuPont analysis, why we look at so many different factors. The gross profit margin is pretty solid. That's again, due to their branding. I think they have a good taste in the consumer's mouth. Let me know that down below if you've had a bad experience with any of their products, because again, there's always different perspectives on that. Operating profit margin is pretty good, actually. They've improved it quite drastically. And I'm actually looking here, not so much in over here. So in 2021 and 2020, of course, these are anomalies, but looking back, they've actually improved it from 2015. So I want to give them credit and not just say, oh, pandemic, they're just improving from the pandemic. No, in fact, they have improved the business. And so we have to give management credit for that. All right. ROIC, again, ROIC is really good consistently, actually. 2018, there was no pandemic there, but they achieved a 46% ROIC. Very good. Earnings quality is consistently good for this business. So again, everything's pointing to me that this is a well-run business, well-oiled machine. Good on you, Canada, for producing a good business like this. Not that it's not expected, but I'm saying good on you. Credit where credit is due. Okay. So I like this business, I got to say. So I might be a little biased because I do kind of like their products. I enjoy their products. Oh, I forgot to mention they have a price target of 83.33 according to analysts, implying a 28.72% upside. So analysts already think they're already pretty bullish on this in terms of price, right? But they actually have a rating of neutral, and that could be because of sentiment or uncertainty. So even though the average price is actually higher, the sentiment by analysts is kind of neutral. So they're not bullish and they're not bearish, right? It's kind of like an uncertainty. I actually, in this instance, I kind of agree with analysts because I just don't know what's going on with the cash flows going forward. Is things are normalized, there are some added risks. So I already mentioned the risk of cash flows normalizing. I'll go a little bit deeper right now in the discussion with you guys. So basically, if we think that rates are going to rise, consumer rates are going to rise for borrowing, what does that imply about the ability for people to borrow to buy their products, right? Well, these are the questions I have, right? And it's concerning to me if the same level or the same amount of consumer lending does not occur. How will people drop, 10, 20, 30 grand in the high instances for products like this, right? And if we go into a downturn, that's actually very negative for a business like this. So in a recession, businesses that are recreational focused or recreational based tend to suffer. Now, of course, you'll always have the high end, right? The high end recreational. High end recreational doesn't really care too much, but this I consider to be a more middle class recreational business. So the products they serve aren't geared towards necessarily the high end consumer. So people buying yachts, for example, there'll always be people, buying yachts in whatever market condition. However, in a cyclical downturn where the economy is not doing so well, the middle class will tend to focus their spending on other things. And if we experience, for example, a lot of inflation or consumer price inflation in energy, housing, and all these things, that leaves less spending ability for recreational things. Okay. So such as, jet skis, right? So if you're going to say, okay, house, jet ski, or boat, replace jet ski with boat, you're probably going to pick house first, or you're probably going to pick, gas for your car first. Or food, right, on your table first. So these are things that I'm a little bit concerned about. Doesn't mean they'll manifest. And I think that's what the stock market is kind of saying here. The market is saying it's cheap. It looks extremely cheap, but might be cheap for a reason. If these risks manifest, you will see, the share price kind of decline or stagnate at least. But if they don't manifest, and this is just, the beginning of a new cycle upwards, right, in terms of consumer spending and all the like, then this company looks attractive. Okay. So on that note, I think we'll look at some of the valuations. And I think, for example, they've grown on average about 10%, right? About 9% per year. So we're going to remove this 20% because I don't think that's actually feasible. And this includes the run-ups here, right? So the big run-up here. So because of that, I'm going to say, for example, we have, I want to have at least a decay scenario of about 5%. So if they decay, this is good to know. If they decay, it's not at fair value yet, but we're not too far from it, right? And I actually want to go back to the price action and see where it was before. So actually, if we experience some decay, the fair value is kind of where it was trading in 2020 or right before COVID happened, okay? So going back again to the model, let's kind of think about it together. I think, for example, scenario 2, we can expect, a moderate amount of growth, right? If they grow at 1%, the model is saying, it's below fair value, right? At the present moment. And we're giving it a decent discount, by the way. And actually, I'm going to remove buybacks completely, but we're giving it a very decent discount here. So again, the market is saying this is cheap, right? And then why is it so cheap? I want to actually go over here and kind of add to a previous point I made about equity being low and leverage or whatever. So Altman Z-score is actually in that middle point where it's uncertain, and actually the model's own indicators say it's uncertain about it. So that's going to obviously affect the recommended allocation weighting. But that's also to note that it kind of all coincides and mashes together and kind of looks correct, okay, in that sense. So let's take a look at scenario 3. I think I made my point already by basically saying 1% and above is basically what we have to determine. But so I think it's redundant, but let's kind of say 1% is our high point in this instance. And then let's kind of play around with that would be our zero bound. Let's say this is negative 1%. Okay, so negative 1% is, we're literally right there. So we can have a decay every year for the next 10 years. And that's kind of what we can expect, right? Of course, it can decay further, right? And if that was the case, there are some uncertainties there. I just want to highlight that. So it might be cheap for a reason, okay? But again, that might not be the case, and it might actually be a very, very good investment, okay? So I just want to highlight mainly the risks, and then because I never want to sound overly confident or bullish in something that, oh, this is a great business, therefore buy. We want to worry the most about permanent loss of capital, worry more about the downside than the upside. And then if you worry about the downside, the upside will take care of the rest, okay? So does it look cheap? Absolutely. Concerns, cash flows, interest rates, macroeconomic environment, because for a business like this, it is sensitive to that. A business like this, it's very sensitive. Otherwise, we care about the business, but businesses that are very sensitive to the macroeconomic backdrop, yeah, I'll care about it because that's part of the fundamentals, right? Fair. Comment down below if you disagree with me on that. I'd like to hear your thoughts on that. All right. On that note, guys, I think I'll end it here. My conclusions or overall thoughts on this business is it's a well-run business. They've shown us that. It's cheap. It's trading cheap. I just think I have my concerns with it. I'm not going to be investing in this business. I would need a much higher margin of safety, or I would need to do a lot more research into the prospects of the future of this industry. But as far as my personal experience with their brands, I enjoy it. I think it's good products. Comment down below if you think otherwise, or if you had negative experience, or if you do like their products, you can say that as well. And as far as adding it, I think it's going to go on my watch list for sure. I'll tell you that it's going to go on my watch list, and I'll probably be doing a little bit of more research here and there. And if I end up adding it to the portfolio in some capacity, I will make a video on that. All right, guys. On that note, I hope you guys enjoyed this video. If you did enjoy this video, go ahead and feel free to leave a like. If you're not subscribed, go ahead and subscribe and come back. And then maybe I'm doing a video on the stock you're doing a DD on or something like that. And I can add some supplemental information, a different perspective and the like. On that note, guys, I hope you guys have a great weekend. I'll see you guys on the next one. Bye.